Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 14th, 2013. And in this video, I wanted to go over the existing or the active growth and income trade ideas. We have a total of half dozen. There's 6 total growth and income trade ideas active on the site right now. For those of you not familiar, growth and income trade ideas is a subcategory that I recently added to the long-term trade ideas. In general, long-term trade ideas are multi-month or longer swing trade or investment ideas, potential trend trades. These are trades with above average growth potential and longer than usual expected holding periods versus the typical swing trade, which is usually measured in weeks or months. Now, the growth and income trade ideas, as the name implies, you have a higher income. These can be high-yielding stocks, they can be bond funds or ETFs. But either way, they are securities or investments with above average yield potential that also look bullish from a chart perspective. So you have the benefit of both growth and income. Obviously, the price targets are going to be a little bit lower than your typical long-term trade ideas because a lot of the total returns you'll get from these are from the above average dividend yields. So let's go ahead and start out here with FFC. This is the F&C Claymore Preferred Securities Income Fund. As with most of the long-term trade ideas right now, these are closed-end funds, and of course you can reference the previous post on this or any of these trades to get a description of what a closed-end fund is. FFC was added as a long within this below this trend line, I should say, below this downtrend line here. Back at on August 28th at let me take a look on another monitor here. We had that at a price of 1771 was our entry. We had positive divergences in place, and currently the stock is trading at 1784. Keep in mind, with all these growth and income trade ideas, particularly those that pay out monthly dividends such as FFC here, as a stock pays a dividend, all other things being equal, the stock price is reduced by the amount of the dividend. So, excuse me, take FFC for example. Since we've entered the trade, it has already paid 2 dividends for a total of 27.2 cents. So if you add to the existing price here, 1784, add another 27.5 cents, that brings us above $18. So, well above $18, $18.10 or so. So the trade is, clearly more profitable than it looks here. What happened is, the trade was, it made a nice breakout, was on the way to the first target, well over, again, we entered below the trend line here, and we were well beyond halfway to the first target, and there's a little hiccup as interest rates have moved up pretty sharply after falling, and that sort of put the brakes on some of these trades. However, this chart still looks good for the time being. It looks like FFC may be pounding out a bottom. We have a key support zone here, which once again, even if this stock takes a few months to form a base here, you are collecting a dividend yield of, I forget, I think it's north or just south of 8%. And in fact, FFC is also scheduled to pay a dividend shortly here. The stock goes ex-dividend on the 19th of November, just 5 days from now, and that'll bring the total dividends paid up to almost 41 cents. So again, even if it takes a while to get up to that target area, as long as we're not stopped out on this trade, you're getting paid to wait in this one. So that is FFC. For the time being, still looks good. Okay, the next one up is JPI. That's the Nuveen Preferred and Income Term Fund. This one holds, it is another closed-end fund, which we bought at a substantial discount. And we bought this one. This was also added as a long trade idea on August 28th. So that was right around here somewhere. I'm looking at the previous chart. Bought it within this falling wedge pattern in anticipation of a breakout. From there, the stock went on, had one more tag at the top of the wedge, i.e. the upper trend line, pulled back, and then made a nice breakout. We had positive divergences in place. The stock came back in, or the closed-end fund came back to make a perfect backtest of the wedge, slightly below the previous lows. At this point, or at that point, the MACD was making a higher low, so we still had positive divergence. We could extend that line out there, and at this point prices are still making, we've come back in, but we've made a higher low. This is another high yielding stock. At the time it was yielding 9%, just over 9% when we added it. It's still yielding, I'd have to check, I think it's north of 8% at this point. And let's see, we've already had 3 dividend payments. I should clarify, the stock went ex-dividend yesterday. That means even if you held this stock and you were to sell it today, you're still going to receive that dividend. Whoever buys that stock from you today would not get the dividend that will be paid out in a few days here. So this one then has paid out, or it's reflected in the stock price, because every time a stock goes ex-dividend, typically the stock price will drop by the amount of the dividend. So you'd add another almost 51 cents in, so we'd be up here at 22.51. Again, this is the dividend if you had plowed the dividends back into the stock. So right about here where the horizontal line is, and we bought there. So here's another one. Overall total return on this trade is positive, counting the dividends. And at this time, the chart looks constructive. As I said, we had divergences in place. Those divergences continued when we made a slightly marginal new low here, and it looks at this point that the stock could be pounding out a bottom. This would be, we have pretty decent support down here. We've had a few reactions. I would not like to see this previous low revisited. I would consider at this point a stop not too far below that 2183 area, call it just under 2180, because if we go down there, the stock may want to go on and lose support. So keep an eye on it, keep your stops in place, and of course, as with everything, everybody's stop will depend on their unique cost basis. A lot of these were long-term trades. Myself personally, I like to average into those trades in my longer-term accounts, and so depending on where you bought into this stock, if you are long, you'll have a different cost basis than I will. And of course, every trader has a different stop parameters that they use, risk tolerance, etc. So again, at the very least, if the stock goes on to take out this low by quite a bit, that should be a pretty good stop sign. Stop level 2175, so somewhere below that level, consider a stop, and that's where I'll take the trade off if we do take out this previous reaction low, which was set back on October 10th. Okay, that's JPI, still looks good for now. Next up is Annaly, symbol NLY, Annaly Capital Management. This is a mortgage-backed REIT security, so this is not a closed-end fund like the others. And I did a static update, static post on Annaly the other day as the stock had dropped sharply. So basically the history on this one, we were in here close to the bottom. I'd have to reference the trade, but I know we made a very nice move up, hitting the first target, going on to hit the second target where I posted booking partial profits on the stock, and I was waiting for a move after this point for a move above that T2 level, a solid break above there to re-enter. Well, what happened is the stock went on, it had a disappointing earnings report and outlook, went on to sell off sharply recently. So I did the updated post right about here, as I know some people did take this trade. And what I had mentioned on there is, my preferred scenario would be to see the stock bounce or even make a little bit lower low, which it went on to do below that level. And again, you can reference the post, but what I was looking for is some nice strong divergence to put in place. Now we can see the MACD starting to curl up here. What we really need to see to confirm this divergence is this blue line to curl up over the MACD line, have this signal line cross, and we still have positive divergence in the RSI. So far, so good. As I mentioned, intraday dips below support. Let me move over to the weekly chart. This is the support I was referring to. We have very solid support here, multiple tags back in 2006. We had this spike, intra-week spike below 2000 in 2008 during the meltdown. And when you see these long candlestick wicks or tails, such as this, and the body is above that support line, that means we broke support intra-week during the week, but we managed to close back above it by the end of the week, by Friday. That's when these weekly candlesticks are finalized. And we saw a tag of the support here recently. Here was another intra-week break, and as I mentioned in the recent update, I would not be surprised to see an intra-week break. So far we've had that. Looks like the stock is hammering off this support. And as I mentioned, if we make a close above, at or above the 1050 level, currently we're at 1090 with a day to go. To me, this is bullish price action because what that does is flush out a lot of the, sorry about that, flush out a lot of the weak-handed longs and bring in some more shorts when they see the break of the weekly support. But again, when I'm looking at a weekly chart, I'm more interested in how a stock closes the week than what happens during intra-week. So back to the daily chart. That's what's happened so far. So if I drew it here, let's draw this out for you. Positive divergence, we're looking at the lows. Price is making a lower low from this point here. I had drawn this head and shoulder pattern, so I'll take that away now. That was something I was looking at before. I really haven't had time to go in and edit these charts ahead of time. So there's our positive divergence. MACD making a higher low. So is the RSI. Price is, coming down and moving sharply back up once we had that intra-week break. And take a quick look. This is the chart that I posted the other day showing how I'd like to see that scenario. So you can see here when we were just right about those previous lows, the dotted line, my preferred scenario, showed us going a little bit lower with the MACD going down a little bit lower and then turning back up. So again, back to where we are. We need to see this stock follow through on the upside here and hold this support and continue to maintain a price, a weekly close this week, next week, going forward, at or above that 1050 level. You may give it a few pennies either way. It depends on your target. If you're a long-term trader investor, I think over time T4 is quite possible in Annaly. And that remains my final target for now. It's going to take a little while to get there if it does, but if you're shorter term and you're just looking for a bounce back, let's say you wanted to take the stock right now, that's something a more aggressive trader could do. We saw that breakdown, intra-week break of support, flushed a lot of people out. So at the very least, I think the stock has a good shot of coming back up to my former T1 level, around 1148. You'll have to watch it. We have a gap here, comes in around the 1129 area, 1130 area. High on that is, 1130 is the bottom of this gap right here. So, keep an eye. That might act as some resistance, but this will be your first key resistance level, that former T1 level. Then again, T2. And as you can see here, this is a nice base the stock has been forming. So whichever way the stock breaks out, if the next breakout above this range here, this support zone, if we get that breakout to the upside, the stock will more than likely go on ultimately and hit T4. However, if the stock cannot maintain these levels and makes a solid weekly close below 1050, chances are there's going to be more downside to come in annually. Okay, next one up is NMO, Nuveen Muni Opportunity Fund. This is another closed-end fund, which we bought at a discount, substantial discount to the net asset value. So remember, the premise behind a lot of these closed-end funds is they were selling at a very steep discount to their net asset value, and in some cases around 10% discount. And so, if the stocks do bottom here, you have two things. You can typically get a reversion to the mean. In other words, the price is a net asset value. That's the price of all the bonds that they hold within the fund, approach par. And then you could have, in that case, it would be a 10% return, if you will, if the fund approaches back to its face value, or par, or possibly goes to sell at a premium in the future. And of course, more importantly, the charts look bullish, so there's the potential for capital appreciation, and in this case, a high-yielding municipal fund. So these are tax-free municipal bonds, free from federal income tax. So you have the added boost there for those of you looking for income. So enough on that. You can again reference the previous post, talks a little bit about NMO, and I believe I gave a link to Nuveen's site, which you can get more information on this. And let's take a look at the original chart on NMO. Hold on one second here. Okay, I found it. Okay, this is the original chart all the charts on the right side of the chart, I should say those from my TC2000 platform, are always time stamped here. So the first post on NMO was back on August 26th, and what we were looking at here is the stock was setting up in this, with strong positive divergences in place. As you can see here, the MACD, the RSI. We had this volume surge, which indicates usually a selling climax after a long, steep drop, or likewise a very strong advance, a near parabolic run in a stock. When you all of a sudden see a volume surge like this, that often indicates a buying or selling climax, which is a lasting bottom in the stock. So let's fast forward to see where we're at today. That was a few months ago. That was at this point here, and since then the stock moved up, came back to make just about a nearly perfect double bottom, a test of that previous low where we went in at around here, and it held, and we still had positive divergences in place down here on the MACD and RSI. Stock went on, or the closed-end fund went on to move more than halfway up to our first target. Has since pulled back. I've drawn this uptrend line here. My preference on this is to continue to keep stops below, somewhat below our entry. And like the other closed-end funds out there and the other growth and income trade ideas, we're getting paid to sit in this one. So over time, even if you did enter here at the lows, you're collecting dividends. And so your average cost would be somewhere below the actual entry price. But again, the key here is to make money in trading. And if at some point in the near future, if we did go on to make a lower low, it all depends on how the charts look, how the rest of the municipal sector, the fixed income sectors look. But without seeing that at this point, I'd be more inclined to say let this one go. At this point, I wouldn't want to see another move down and break below those previous, the double bottom right here. So longer or more aggressive traders, those wanting to keep a tight stop, there is an uptrend line that I've drawn here. You may want to stop out on a solid daily close below this uptrend line. But again, for now, the pattern looks good on NMO. Real quickly, I've jumped over to the weekly chart. This was the original weekly chart, also posted back on August 26th with the original post. And what I was looking at here is this horizontal support line, this key multi-year support. This is a 10-year weekly chart. So back in the meltdown in 08, 09, once prices broke below that level, you can see here we had several attempts to get back up. They pierced above it slightly, but never even closed the week, or if they did, it was only slightly above there. So as you can see, this was resistance. Failed, came up, failed here, a couple weeks, finally broke above it, came in and back tested. So now we have an established support level here. That support level was revisited back in, looks like late 2010, early 2011, and this is where it was another reason for going long that stock. Mentioned it as a long back on August 26. And so if we fast forward to where we are today, looking at the weekly chart, we can see that so far so good. We've had several bounces off that level, and that support level has held. A few intra-week breaks below, maybe a slight close below, but so far so good. And again, that's why if we go below those recent lows on NMO, there's really not a whole lot of support. That is a key support line, so we do not want to see a weekly close below this level, which we'll call it this is a rough estimation, 1065-ish. Again, use that daily chart and look at those two previous reaction lows to get the true level. Okay, second to last one here. This is NSL, Nuveen Senior Income Fund. This is another closed-end fund, and this one, as I mentioned in the previous post, is sort of unique. Unlike the other closed-end high-yielding funds, which either hold preferred stocks or bonds, municipal bonds, all of those are fixed income securities. This is a floating rate fund. In other words, this fund invests in loans which have adjustable rates. So this is the one of few income vehicles that has the ability, sort of like TIPS, the inflation adjusted treasury bonds, as rates go up over time, the rates on these loans will adjust. So you don't have the typical interest rate risk that you do have with other bonds. We all know, or we all believe, or most of us do, that over time, it's hard to say what will happen in the next week, next month, but over the next few years, rates pretty much have nowhere to go but up. So this is a potential good long-term hold, and Dividend, you'll have to check on Nuveen's site. I'm showing a dividend yield here of 6.7%, but sometimes these charting programs are not very accurate on the dividends or don't have the exact rate, but I know it's up there around the 7% range. We took this one here within the bullish falling wedge towards the bottom of it in anticipation of a breakout. In fact, let's look at that original chart. Here it is, posted on August 27th. And this is the support line. Price was 705 at the time. And like everything else we've had, I believe this one's a monthly paying closed-end fund, so we've had quite a few dividends along the way, and the price as of today is $6.99, so we'll call it $7. So we're basically, the price is flat, but again, if you add back in those dividends that we've received, the trade is positive. This is a resistance level, so we can look at the the stock appears to be holding above this key support level. And just as it did back here, ideally we'd like to see a breakout to the upside. Sometimes stocks will do this. These are those, a brief, we're looking at a daily chart, so the stock did go below for a few days here. I don't know if that was an end of week close. Let's see. Yeah, that was Friday, and the stock hammered back up. It looks like to close just on top of that support level. So here was another intra-week breakdown, as I talked about. And with the stock closing on Friday right back above the key support level, and then finally went on from there to break out above this trading range, which was bullish. So I'd like to see that again here. So if you are in NSL at this point in time, the next buy signal would be on a solid break above this weekly resistance zone, and your stop or sell signal would be on a solid break or weekly close below the bottom of the support zone, which is roughly 692. There's a reaction low above that, so you might want to say 690. And again, I'm looking at a weekly, longer term, potential in this trade. So my preference on a lot of these is to give it a little room and allow for a weekly close. But chart still looks good for now. Okay, the final growth and income trade idea, RNO. Now, probably in all instances, depending on who you are and where your stops are, this one should have been stopped out. I never followed up with a specific or suggested stop level, and I'll go on to move in. Let's just take a look at this stock, and I'll tell you why I'm going to leave it on for now. Here's a two-day period chart. This just zooms out a little farther and goes back to these peak highs and back in July of 2011. I wanted to point this downtrend line, which has come into play. So this is, if you will, a very large falling wedge type pattern, strong divergences in place. So overall, this still looks very bullish. This is a coal stock, by the way, very high yielding coal stock. I'm showing here a dividend yield of 14.5%. You may want to check that source on Yahoo or somewhere else. But either way, I do know it's well into the double digits, very high yield. Now, keep in mind, when you see a stock with such a high dividend yield, as I often state, there's a reason for that. The fundamentals are not solid in the company. That dividend is not very secure. Otherwise, the market would not have a stock yielding 14.5%. That's the way it works. So maybe the dividend's cut down the road, maybe not. Maybe something even worse happens to this company. So you really have to be careful when playing these high dividend yielding stocks. With that all being said, you spend your time looking through the fundamentals, look into the company. Right now the chart still looks constructive because we are at the bottom of that large rising wedge pattern, that falling wedge pattern. So we've had this several reactions here. We'll call that 2, 3, 4. We're almost here on the fifth touch. We can go a little bit lower. So, this one I'll leave it on as a trade idea and an active long unless we get a solid move, especially a weekly close below this downtrend line here, the lower downtrend line. What happened is we entered this one up here, and I believe the stock's it's down about 10% from entry right now. And what happened is we had a breakout. It looked good. The volume was there. But a few days later, it rode down, back tested, and then finally gapped below this uptrend line here. Came back, if you look at that, to make another test of the top of the wedge pattern and failed. So that's where we're at. This, by all means, if you're not in this and you're looking for some growth and trade income ideas, I would consider this a very aggressive trade because the stock is acting unhealthy. I don't like the fact we had this failed breakout. However, with that being said, from a pure risk return point of view, an entry here around the $12 level with stops not too far below. If the stock does manage to hold this support level and the company is okay fundamentally, I can easily see this stock going on to break out on the next attempt, the next run. We're getting very close to the apex of the wedge, so a breakout above that wedge would probably be your next buy point. In other words, maybe consider a partial position here. If support holds, wait for a breakout of this uptrend line. And my guess is, I've seen these breakouts, these false breakouts occur, and then typically the next one will stick if we do get another breakout above this trend line. And these remain the targets. So a lot of potential, from a move from 12 all the way up to 17, which I think, of course, just looking at the larger pattern again, that could easily be hit, in my opinion, based on everything looking here at the charts. So, all right, folks, this has been Randy Finney with Right Side of the Chart. Hope you enjoy.